Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Friday edition of Benzinga's Pre-Market Prep. Spencer Israel here with Joel Elconin and Dennis Dick on the show today. Continuing with the earnings parade, we got earnings coming every which way. Just to name a few of the biggest ones: Amazon, Twitter, AbbVie, Chipotle. We'll cover as many of them as we can. EA, no guest today, so we're going to cover as many of the Twitter reports as we can in the next hour. We're also going to do a little segment where we break down the overnight trading in Twitter. But before we do that, Joel, why don't you tell us what is happening overnight in the S&Ps?
Nice little range, holding at 28.40 with a 39.25 low. That's our bogey we need to hold. On the upside, 47 even is just shy of Wednesday's high. The high of the move at 49.50. Crude in a trading range from 69 to 70, down 18 cents at 69.43. For our crude traders, look out above 70 here. You got a triple top. You have gold in the red here, trading set down 740 at 1227.90. Silver down 11 cents at 1539. And it looks like the expiration in the July Bitcoin futures is leaning towards the downside, back under 8,000 at 7,925, 335. But Dennis is fired up this morning. He was blowing up my phone last night with Twitter. Let's talk. We'll talk about the report, Dennis, but holy mackerel. Let's talk about what was going on last night in the after hours trade.
All right, so let's start in the sequence of events. So last night after hours, there was just a buyer. Somebody wanted to buy it basically since 4 o'clock. I could see even, and I was trying to trade ahead of it a little bit too, because it was trading down around 42.80. There was a huge bid of 42.80. So I'm like, I bought some in 42.80, 42.90. And it started, the bid started coming up. So I'm like, oh, this guy's hungry. He actually wants to buy it. So I actually was just scalping in front of it. I had no intention of holding it through the report. You can get out of Twitter fairly easily. It's always liquid after hours, especially on a night it's going to report. But the bid was coming up. So I did some scalping and traded it a few times. I actually traded even short a couple times in there. Scalped it quite a bit last night, made a little bit of money. But the bidder got really aggressive. So the bidder got really aggressive after, I'd say, 7:30 last night. And Spencer, if you can bring up the tape, you can actually see after 7:30, they really start to come up and start to buy it. So it was trading up about 30 cents on some volume. So, whoever was buying it was, buying some stock. After 7:30, they're like, I need this stock. They just needed it. So they're going 42.40 is offered. And all of a sudden, just 42.50 bid with an iceberg. So it takes out everything between 40, 41, 42, 43, 44, 45, 46, 47, 48, 49, and goes 50 bid for an iceberg and not moving. People are hitting the 50 bid, not moving. I was like, oh, this guy's got more to chew on that. I was still short a little bit at the time. I was like, I lifted 51 because I could see this guy was going to be aggressive. And I actually lifted 62. Then it goes 60 bid. And then it goes 70 bid. And the institution's just, sweeping out everything in the middle of it and just holding that bid. And then it goes 80 bid too. We're trying to show it on the tape there. Spencer can maybe roll it in a little bit because it's really small.
I made it bigger.
I don't know if you can zoom in on that. He's trying to make it bigger there for you. But you can see with like 15 minutes to go, it goes all the way up to $44 and lifting like 25, 30,000 shares up there at 44. Then it goes through 44 up to 44.10. So we were just doing some quick math. In the last 10 minutes, that person bought over 57,000 shares. That's not including everything they bought in the other 3 hours that they were trying to buy, but really aggressive in the last. So you could easily estimate that that trader, and you could tell it was the same trader because it was the style of the order. There's not just anybody that's going, just lift the offer and put an iceberg at 50. Just lift the offer, put an iceberg at 60. Just lift the offer, put an iceberg at 70. There's nobody else doing that. It's the same trader. It's obvious because they're doing this. It's doing the same thing. That's just tape reading. So somebody had this absolutely wrong. I would say as an easy estimate, they bought 100,000 shares in the 43 up to 44 last night. I think they might have bought a couple 100,000 shares. So you could say they possibly threw away over $1 million doing that. It was such an aggressive buyer. I was like, they must know something. I was even texting you, Joe. I'm like, this person must know something because nobody's buying that aggressively, into a report. They obviously knew nothing because the stock is down 15% here. So poof, probably $1 million thrown away by that buyer last night. So it just goes to show you, if you're watching options, if you're watching trades, sometimes the people know something, sometimes they don't know anything. Maybe you were right. You were saying maybe it was just somebody that's short that didn't want to hold in the report and they wanted to absolutely be out. Maybe it was somebody that just, thought that it was going to go. But obviously they knew nothing because it's a flat out miss.
Obviously they weren't.
Results.
Okay, just real quickly, they weren't listening to Benzinga's pre-market prep show and my warnings about Twitter trading into 30 handle, and also 44 was resistance. So yeah, it's hard.
You can talk resistance and support all you want, but it really doesn't matter. When Twitter was going to report, it was going to probably move $5 in either direction. What was the straddle?
I didn't look at it.
I'd imagine it had to be $3 or $4 worth.
Let me look.
So I think technicals are almost meaningless. Like when you're when it's close to the you could say technicals mean something after the fact, but on the event, you could say this chart looks like a cup and handle. It's going. The event happens. It does. If they miss, it doesn't matter what the chart looks like. It's going down. So there's certain times where technicals are almost meaningless. And during an event like this, I would say this is one of them. You can look at that chart all you want and say, oh, yeah, 44 was resistance. But if Twitter blew it away, you're telling me it wasn't going to go through 44?
You were like, you thought to say $50.
If this person's buying that aggressively, I was like, man, this thing could just blow it away. I did not take a position, thank goodness. So because I was really believing, I was like, this person must know something. I was even tempted. I was like, maybe I should take a long in the report because nobody's buying that aggressively that doesn't know anything. Oh yeah, they didn't know anything and they were buying that aggressively. So it just again was to show you've got to really respect, and then there's some crazy stuff happening here right now with Algoland. But anyways, it just goes to show you.
Well, yeah, and I wanted to say that the tape I have up here doesn't even tell the whole story because I filtered this by orders of 500 shares or more.
Yeah, so, you're not seeing all this
small
stuff.
You're not even seeing the random orders of 100 and 250 and 300 and.
But look, let's just explain what you're seeing on the tape. So you can see at like 750, 250. That's 16,000 shares. All those trades happen at the same time. Somebody just said lift everything at 44. I could see the 44. It was like 30,000 shares there. They just took them all. Buy them all. Buy 30,000 shares. I love this Twitter. Not so much now. Whoever that was last night is throwing up or is fired.
All right. So back onto the Twitter numbers. They did report this morning there. You see them down on the chart. The Q2 EPS, 17 cents, is in line with the estimate. Revenue, $711 million versus $696 million estimate. So beat there. But the MAUs were down. And monthly active users for the quarter, 335 million versus $338 million number. So they missed, and that's a critical number. They missed that, and I think that's what people were watching for.
Just an unbelievable move here for the stock. Now, again, the straddle fuzzy with the save here, 13%. So think about that. Here's the stock trading down 14%. Man, they get this right. And to show you, it is so tough making money buying options. Here you're getting an extreme move in a stock. And if you were buying the calls and the puts, you're not even up money. It is so difficult to make money buying options. Now, unless you're Joel, because he only bought the put. But Joel's sitting pretty here right now. Joel was fading everybody, including that buyer last night. So Joel's sitting pretty because he's sitting on some puts. But what did you pay for those puts, Joel? I'm just curious.
I paid up. You're going to get mad at me. I got and I went all the way out to August. I got the August 42s at about $1.60.
Oh, that's not bad. But the stock must have been quite a bit higher then.
Yeah. And
when did you buy those? Like the stock was 45 or 46 when you originally bought those, right?
No, it popped. It popped over 44. It got to like 44.50 after it hit that 41.56 low. So it was like
$1.50. The straddle went out obviously a lot more than that. So I think those, at 42.94 close. that 42.50 puts were probably, what were they going for yesterday? Probably like $3 or something.
I don't know. I sold one or two on the close. Yeah, I did. So
you got to make big. When you're buying options, make big. Don't go for 10, 20, 30%. If you're going to buy options, you got to hit it. You got to make big money. So here, whatever you got left, you're going to make some big money on.
Yeah, and I'm just going to let that. Also, I think I might dump it out of my long-term portfolio today, too. I mean, I think the story's over. They just don't make any money. You know what I mean? A couple $100 million. I mean, in a big-time company, I'm just kind of feeling like, man, if they, it's just not even $1 billion mark. I mean, I'm just not impressed. That was something that you always talked about with valuation. Yeah, if I sell today, I'll have 6-7 points on the board, but I don't know. I might turn into, I was a perma bull for a long time. I don't know if I'm going to be a perma bear or not, but I mean, $200 million. I mean,
that was my argument at $15.
Yeah.
Oh, you see how well that worked for me. The thing got hot. But
yeah, I
mean,
know.
I wish I would have been listening to you guys more, because you were buying your Twitter originally around there, weren't you?
17.
You're at averaging at $17. So you're still holding those long term, or did you sell some of those?
No, I didn't. I was thinking about it.
But you had some puts to protect you. So
yeah, so
good call on the puts.
All right. Amazon. We got to talk. I mean, it's 11 minutes into the show. We haven't talked about Amazon.
It was fun to talk Twitter, and fun to talk that buyer. Let's talk Amazon here. Give us the numbers, Spencer, because this stock is going the other direction.
The Q2 GAAP EPS was $5.07. I don't have the adjusted number on me. I'm sorry. Sales $52.8 billion versus a $53.27 billion estimate. Q3 sales guidance for Amazon coming in a little light, $54 to $57 billion versus a $58 billion estimate. Operating income for Q3 $1.4 to $2.4 billion.
Big move here. Big move for Amazon. It's trading up now 75 points. But really, when you put it in perspective, you'd be like, whoa, but it's an $1,800 stock. So it's a 4% move. It's a nice move for Amazon. But I bet you the straddle buyers here are losing money too. Fuzzy, if you got it, curious what the straddle was going for on Amazon, because I bet you it was probably more than 4%. Joel, you on mute or what?
No. I was just trying to figure out.
That's your cue. When I stop talking, you start talking.
Yeah. No.
That's how a radio show works.
No, I see this spike. I'm just trying to figure out where this low was.
You're in deep thought here. Are you trading your Twitter? Are you trying to trade out of your Twitter right now? Is that what is happening?
No. 17. I'd see the spike to 17.0501, and on the number, and then in the same bracket, it hit 1895.
Oh, I know. That's what it did.
200-point move.
No, that's what it did. I had my one buddy who took a small position long just as a trade into Amazon. And he's like, it was down 90 points. I was throwing up. He's like, thank goodness I didn't sell down there, because it came right back like a minute later. And he actually ended up getting out near the top. So good job there. One of my friends from Bright, but holy cow. He's like, I took so much heat on that. He's like, I'm never doing that again. He's like, I'm never holding Amazon into the report again for a trade. He's like, I grew 25 shares. He grew 20 gray hairs in that 30 seconds, and it went down to 17.10. It was wild. It was a wild opening candle. They murdered it, got it all back, and then rallied the hell out of it. And then it came off again, and then it actually started. So it was just wild trading. And I mean, that's the one thing. If you've got options, and let's say you have puts, I'm going to tell you again, the best way to do it is to buy the stock against it. Because imagine you had puts, on Amazon. Last night, you bought the 1800s thinking, okay, man, I'm going to go for it. If you're coming in this morning, they're worthless. But you know what? Last night, you could have had, if you would have had one, one put, you could have bought 100 shares down to you could have threw your bid at 17.25 and been long. And now you're up 170 points. So you gotta, I'm telling you, guys, if you've got options, if you're an options trader, you are leaving so much money on the table if you are not buying the stock against your puts or selling the stock against your calls. There is just such a good strategy in that. And that's the only way when I was trading options, I'm always buying the stock against my puts, because I'm locking it in and then I'm getting the free upside. You can take advantage of all of that volatility. So you can say, well, how did you know it was going to do that? Well, you know what? It didn't matter, because let's just say it kept going down on you. So you bought the 1800s or 1800 puts. You bought it at 17.25 and went down to 1600. So, well, you'd still locked in 75 points, So, you probably paid for the put. I doubt that they were going for that much. So you still made money. But if it reverses and right on that initial spike, that's where the best part maybe to make the market is. Sometimes it spikes down and spikes back up. And now not only are you making the 70, you aren't going to exercise those puts, but you still got the stock long and you're sitting up there at 1886. It's awesome. Awesome way to play it, guys. And there's so many traders. I bet you 99% of option traders don't trade the stock against it, and they're doing it wrong. Trade the stock against your options.
It is a good point. It is a very good point. I'm just going to give you folks one number here because Dennis only likes one number, and that's 1896. Your initial spike took it right to that area. The high so far in the pre-market is 1896.40. Close to your 1900. Call you what you want. If I had stock, I'd be selling it up there. I'd be selling it right. I probably would have sold it at 1850 or 1863 was the all high. But keep an eye on that pre-market high. Amazon trading up $79 at 1887.
Just go back to clarify this. Spice is saying you can't trade after hours options. That is absolutely correct. The options aren't open. So that's why you trade the underlying stock against your option position, because you cannot, if you're just a pure options trader, you can't extract any of that because you can't sell your options until 9:30 when the stock opens. Well, the stock has already done crazy moves. You can't participate in any of that. But by trading the stock against your options, you can. So I'm just going to outline the example again. If I had the 1800 puts, one contract, you can buy.
You're selling at 1800. You got to explain the positions. You're selling at 1800.
I buy a put. An 1800 put, thinking Amazon. I think Amazon's going down tomorrow. Let's just say this is hypothetical. I buy the 1800 put, one contract. Now that lets me be basically net short 100 shares of Amazon. So you have a hypothetical net short of 100 shares of Amazon, at least if you bought the weeklies, until the expiration tonight. So now you can safely buy 100 shares and know that, so I can bid 1750 or 1740 or 1720. So I'm just going to throw out the 1720 bid for 100 shares out there. If it hits me after hours, I lock in 80 points. And, and the trade, could be done, but I'm not, but it's a way to participate. So I buy 1720, I've locked in now 80 points. So now I am long 100 shares and I am long one put. So if the stock keeps going down, if you just, want to be done with the trade, it's done. And, at expiration, you would lock in and it would just naturally exercise. And your put would obviously sell the stock that you're net long as of the Friday close tonight. But in this case, it came all the way back. So you're definitely not going to exercise your put now. You're still long 100 shares from 1720. So you're not only up 80 points, you're up another 87 points because we're 100. And what is the math on that, Joel? You got the math award there in grade 2. What's that? 177 points, isn't it? 87 plus 80. So you're up 177 points now on that, on that long position. So forget about exercising the put. You just bank yourself and sell the stock outright. And you're up 177 points, all because you had that put. So that's showing you the opportunity that so many people leave on the table because they can't, if they're just trading options flat out, you can't participate in any of that until 9:30 when the stock opens. And the big moves happen after hours, right on the violent move, usually on the release. If I was trading options and I used to be an options trader, I always was trading the underlying stock against it.
Okay. All right, Dennis. Thank you. We're getting a lot of appreciation from that.
Lobster's a great trader in the chat. He's saying the same thing. I do that often. He says the best juice you get is around earnings release headline when the stocks get whipsawed. Exactly. That's how you take advantage of the whipsaw safely. I mean, if you're just flat out buying, it could just blow right through you. I mean, you could have bought 1720, could have went down to 1600 on you, and you're puking 120 points. But in this case, it's a way to, if you think it's going to whipsaw, it's a safer way to play it because you have those. And I mean, if you're going to pay out premiums on the puts, let's try to extract as much juice from those puts as we possibly can. So That's the best way to do it. The downside is, obviously, you got 100 shares, it's an $1,800 stock. What do you got? 188 grand in your account to be able to buy stock against it, or, at least 90,000 if it's 2-to-1 margin. So that's the consideration, is you actually need some size, which, as a prop trader, I don't worry about that because I have, significant amount of money backing me. So I can, participate in these strategies. But if you're a little retail guy, it's difficult. So that's why it's kind of handcuffed and not going to be available. But I mean, if you're independently wealthy and you're not trading options this way, you're leaving a lot of money on the table.
All right, we got GDP coming up in just about 10 minutes, and let's cover a few other stocks here. Dennis, what do you want to hop off at, like 828.30, 828, 829?
Well, is GDP going to move the market this time? We know this. We know the jobs numbers do. Are you telling me the GDP is going to move it? Because remember last time I was like, nah, GDP doesn't move it, and then we had a huge move. So should I hop off at 828 and trade?
Yes, of course.
Joel thinks we're going to move GDP, so I will hop off at 828 and go try to trade that 830 number. If it doesn't move, I'll be back at 831. But
and for the next 7 minutes, we are not going to be distracted. We're going to let Spencer take over the show, and we're going to do some earnings reports.
Well, you know what? I've got one more thing. I had a Twitter question last night here, and I want to address this too, and it's a good one. They wanted me to address this on the show, so let me just go read it. I got to open my Twitter. Sorry, I don't have my Twitter page open. So opening my Twitter account here right now, and this message is from I gotta go hunt it down.
Is it Scott? Is it Scott C? Is it
no, hang on. It's from Robust Capital. Hey, Robust Capital. He listens to our show all the time, so I'll give a shout out to you. Robust Capital there on Twitter. He says, hey, Triple D Trader. During pre-market trading, I noticed that 8 a.m. A volume and a lot of funky prints on the tape right at 8 a.m. I read that institutions have to wait until 8 to trade. Is this true? And if so, do you look at pre-8 a.m. action differently? Maybe a good question for the pre-market prep show. Okay, so I'm going to address this now. You know what? It's interesting you say 8 o'clock because actually the interesting action is at 7 o'clock. And at 7 a.m., so at 4 a.m. in the morning, that's when ARCA and NASDAQ open. So that's when those exchanges open, NSDQ and ARCA. At 8 a.m., at 7 a.m., all the edge exchanges open. Edge, BATS, all the direct exchanges, like 4 of them that they own. So at 7 a.m., you see some crazy moves because you have another opening auction where all those other ones open up. So, and there is actually a lot of truth. There's a lot of retail traders. There's a lot of institutions. There's even some prop companies that don't allow you to trade because it's so illiquid that don't allow you to trade before 7. So after 7 o'clock, then the trading action changes significantly. But right at 7, you can sometimes see some violent moves because those edge opens up and BATS opens up and those other exchanges open up. So all of a sudden, if there's orders that are on the book, if you're going to participate in the closing auction, the price can move dramatically. Like let's just say somebody hypothetically had 10,000 shares to buy Philip Morris, and all of a sudden, at 7 a.m. that order becomes active. That can move the market. So at 7 a.m. I noticed this stuff. And it used to be, years ago, Edge used to open at 8, but they changed it back in 2016. They open at 7 now. So all the stuff used to happen at 8. It now happens at 7. What you're noticing at 8 o'clock, there could be some institutions that come on the board, but it's not as much action as 7. So Robust Capital, I would tell you, if you think the 8 a.m. hour is funky, go check out the 7 a.m. hour. That's where you see some real violent moves, right at 7 a.m. Eastern, right on the nose, because that's when those exchanges become active.
Okay, good. Good answer to that one. Thank you. Keep your questions coming in.
So let's go to Spencer. If you want to lead the way, I was hoping to go to Intel. I actually bought Intel in my investment portfolio. I stuck a small piece in there a couple weeks ago, and it's not good news for me because the stock is down significantly here, and they're delaying a chip and all kinds of funny things. So there's some action here in AMD off this too. Give us the details. INTC. Dennis is going to put a sad face on because he owns Intel.
Well, as far as the numbers are concerned, the Q2 EPS, the Q2 numbers were both good. $1.05 versus a 96-cent estimate. Sales $17 billion versus $16.75 billion. So they beat on the Q2 numbers. The Q3 sales guidance was higher as well. $17.65 billion was the estimate, and then 17.6 to 18.6 is the guidance they gave for Q3 sales. So the numbers were good. Delaying a chip is bad, but I'm not sure if that's enough.
It was because the stock was down a bit, and then they announced that chip delay, and it fell another $2. So they really didn't want them delaying that chip. And AMD, on that news of the chip delay, started blasting off. So obviously AMD's competitor, and AMD is trading up another 4%, hot as hell. And I tell you, man, you're trading for 20 years. You'd make some good trades. You made some bad trades. I have just butchered this Intel AMD stuff in my investment.
I know, and I want to talk to you about that.
Butchered it. So I'll tell you, and it was about a year and a half ago. I was gonna buy Intel. I actually bought Intel in my investment portfolio at like $38, and I read this article from Rosenblatt, And, nothing, I like the Rosenblatt guys. And I know some of those guys listen to Justin Shack, great guys. Anyway, so I really value their analysis, but the article was wrong, at least at the time. And it was telling how basically AMD was eating Intel's lunch. And I'm like, oh. So I turned around and actually I read it. And that was when the Tesla thing happened with CNBC. That was a topper for me. CNBC said that AMD had got a big Tesla contract. And I was like, oh, and AMD ended up, was going up on that news. And then it pulled back. And I was like, you know what? I think I did it wrong. I think I'm going to buy AMD and sell my Intel. So I sold my Intel and went and bought AMD at like $13. So sold Intel around 38, bought AMD around 13. Anyways, after that, AMD gets annihilated and Intel keeps going up. And I was like, I'm like I did. So Intel went up to like 50. AMD went down to like 10. And I was like, holy cow, I did this all wrong. So recently, we've had this move here in AMD where it's run up. Well, AMD got back to like 13, 14. Intel pulled back a bit. And I was like, I wanted the Intel over the AMD originally. So I went back to that. So I sold my AMD around like 13 and a half or $14 and bought the Intel. And now AMD is at 19 and Intel's at 48. So I tell you, I did this all wrong. Maybe I should just stick to short-term trading, this long-term investing. I did that one all wrong. Anyways, that's my sob story. So right now, I'm currently in my investment portfolio long Intel and no position on AMD, and I'm kicking myself in the butt.
Okay. Spencer, all right. Did you give the report on Intel? I don't even know.
He did. He gave the report on Intel. Let's break down the technical.
Oh, God.
It's down significantly. I could see those levels down at $48. Joel, do you think they hold?
Dennis, did you take your pill this morning? I mean, I just can't. I'm like you are all over the investment portfolio, scalping AMD, Intel, and then you even got
for traders.
You got Tesla.
I only have 55 seconds before I have to leave.
How'd you get Tesla in that conversation? Anyways, pre-market low is 48.44. That's your level of control. 48.50 was your former low of the move. Looks like you got a little bit of someone making a stand here, but 48.50, that's the level I'm keeping on. That is the low of the move.
You want to go?
And then, okay, so 30 seconds here before I leave. AMD, go with quick technicals on this one too, because this thing has been an absolute monster. Reported earnings now gets more of the chip. I mean, this thing is just in rocket ship mode. We haven't been up here in a better part of a decade. What are your thoughts here, AMD?
Oh, man, that thing broke out yesterday. We talked about it on the show. It had had all those highs. Man, that's history now. Another big move here, 1970s, 1911 up 76 cents. I mean, I don't know, Dennis, you're going to have to go back into let's go to the monthlies here. And let's see the last time this thing traded $20. Traded 2063 in January 2007. There's probably like $1 trillion to sell at 20. But if you're holding out for more being on the bone over the next couple of days, 2063. That's your January 2007 high in AMD. And you know what? At one point, this is a long time ago, I think I had like 500 like AMD 2 calls or something like that. 2.5 calls or 3 calls or something like that. Of course, they went off the board worthless. But anyways, yeah, they would have been. Okay, Dennis, a minute and 40 seconds here.
I'm gonna go trade the number. You guys can go and calm down now because I didn't even drink coffee here today. So okay, do what you gotta do. You got 3-4 minutes. You don't have to complain about me.
Okay.
Well, let's start. All right. We had ExxonMobil at the top of the show that just came out at 8 a.m. So I mean that was a half hour ago now. But let's talk about ExxonMobil. Q2 EPS 92 cents. Versus $1.09 estimate. Sales 73.5 versus 72.5, approximately $1 billion. So a beat on the sales number, a bad miss on the Q2 EPS. Did they give guidance? I'm not seeing any guidance right now.
Let's see here. Boy, street leaning the wrong way on this one. Closed near the high of the session, but that's history. Full bottom on the 15-minute chart at 81 even, 81.02. I do see a low at 81.06, 81.03. So big move for it. I'd be more of a buyer down at the 81 level than a seller. Long way to go to fill the gap up at 83.37. So is CVX out, or how are they doing? They're not out yet. They're trading up 47 cents. So we'll see what their report is. GDP coming out. SPOO's at 41.50, 41.5, 41 even, 40.5. Let's see what the number is. Breaking news. GDP,
4.1%, in line with the estimate. 4.1%, which was the estimate. Remember, the prior reading was 2%.
Wow. Okay. All right. Well,
we've got crickets. Well, we're starting to rally. I was like waiting for the move. I was like, is that number out? Because we've moved like half a point. Anyways, okay, so we're up a point here since the number now. So we have a little bit of movement, but very muted activity. TLT starting to catch a small bit here. So we just went up about 20 cents here since the number, but the activity is really muted here yet. So we'll see if it starts to get wild. I might have to help back off, but I'm back because it looks like that was not a good trading opportunity there. So Chevron usually breaks at 8:30. I don't know if we just did. Oh, yeah, we must have. Ooh, Chevron. Ooh, not good. Not good news.
Did you trade the Intel off it? Not the Intel, ExxonMobil?
Well, ExxonMobil reported at 8, so it was already down.
All right,
so okay. I thought about shorting. You know what? And it was a tell because ExxonMobil started trading down and Chevron was still bid up. I was like, I should short that Chevron at 125, but I was like, its numbers are due out and who knows. So anyways, it's 121. So kicking myself. My butt is getting sore here right now. I've kicked myself a lot here in the last 24 hours.
All right, Spencer, you want to go with that report?
The Chevron numbers, I don't have the estimates. I just have the numbers. Okay. Q2 EPS of $1.78, sales of $42.3 billion. You know, let me see if I can hop on the calendar and get the estimates that way. But those are your Chevron numbers.
Trading at 121 even here, straight down. Dennis bid offered it. What is it offered there? Someone still got
It's 2 points wide right now, 121.01 to 123. So, and there is 120.95. You got a couple little bids for 21. So somebody's trying to make a small little stand there, but very small size.
Okay, wait, here we go. Can I try this again? So the Q2 EPS, $1.78, $2.09 was the estimate. Sales, sales $42.2 billion versus a $45.59 billion estimate. So big misses.
Big miss for Chevron. It is trading down. Again, this isn't a stock that's going to move $10 on earnings. Very rare. So, typically Chevron will move a few bucks on earnings. You're seeing that move here. One of your biggest, oil stocks. It's obviously got a huge dividend, 3.7% too. So that gives them some dividend protection. It is somewhat, loved by the street because it's been one of the better performers of some of these oil stocks. But in any regard here, a miss is a miss. Stock's going down. Not down as much as you'd think, though. 123 just kissed again, but offers starting to form up there in that area there too. So it looks like it's starting to leak.
Spencer, you show the pre-market chart here, 121 even, right on the nose. That's a pre-market low. Spencer, can you switch to a daily real quick? Because we talk about our technical analysis and we give our levels and stuff, but this really illustrates what Dennis and I look at most of the time. Look at your lows from July 19th, 20th, 23rd, okay? 3 lows in a row, 121.01, 121.01, 121.16, all right? So the buyer that was there last week and early this week at that level, they were there again. So, boom, we're going to be back there.
They're trying to take them out now,
They're trying to take them out. Yep.
But it's right there. Look, it's defended again. It's right there. It's 121.25. Just came back bid. There's definitely some buyers in there. Now, we had, we were saying this. Which stock was we saying this on? The big level, and it just blew right through it. It was Honeywell, wasn't it? We saw 3, 4, 5 sellers, and then it just blew through it. I mean, earnings can power you through that, but what Joel's trying to say is, that might be a level where you pause. It might be a level. It might work out. I mean, it's just probabilities. I mean, trading is all just living in probabilities. And if there was a buyer there before, there might be a buyer there again. Might not, might be. So, you have to respect that. And if you're short the thing, you kind of look, if it decides to start stalling at 121, well, maybe the big fish is back. So that's, what Joel's trying to say. He's not saying just go flat out here and buy at 121. It has to bounce there. A stock doesn't have to do anything.
Nope.
But 121, it was support. It's a good number there. He's giving you 3 lows in the same area. Maybe it holds again. It's trying right now in the pre-market, but it's so early.
Exactly. After that, 119.67. That was your low on July 18th. But SPOOs are starting to leak here, Dennis. What are they hitting out there? We're down 3 points now at 39.50. Just another thing that I just kind of want to highlight from doing the levels and fine stuff. You had a double close, a very important area in the S&Ps. You had a double close at 41 and a quarter and 42.50. It did get through there in the pre-market. It got to 47, but we get a pop up to 28, 41, 42. You get a lower risk short here in the market.
I'll tell you, obviously XLE here, which is huge on Chevron and Exxon, but it's starting to get hit now too. It's down 1%. So it's sometimes fun to look at your ETFs, obviously, that have a heavier weighting in just a couple stocks. Alternatively, XOP, which I have a day trading position on and just overnight position, doesn't have hardly nearly the weighting. It's more equally weighted, so you won't see XOP moving down nearly as much as an XLE on the Chevron and Exxon news.
Okay. All right. And Spoon's hanging in there at 28.40.
Brent was pointing out to me that for the big oil stocks, the ExxonMobils, the Chevrons, the estimates don't matter as much because they're more pegged to price of oil, and it's kind of hard to forecast for that.
Well, it is. I mean, that's the one thing about oil stocks, and I've always played this strategy when oil stocks move kind of with oil, and when you see a huge move on earnings on an oil stock, often not saying to come out here and buy ExxonMobil, it's going to bounce right back. But in the long run, oil really is what dictates. The oil price of oil is really going to dictate the moves of these. So sometimes you can get some outsized moves where a stock might move 7, 8, 10% on oil. And often, you look at it a few weeks later, it kind of bounces back because they like to move with oil. So the fade trade works better on oil stocks than it does on other stocks because you're right. They're more dependent on the price of oil. And if oil's moving up, those things can come back. But right now, I'll tell you, ExxonMobil is in a world of hurt. That's a big move for ExxonMobil. Let's go back to it. It's down $3.40 here right now.
Ooh.
That is a big move down for Exxon. I got to think $80, Joel. It's a big whole psychological number. I mean, the thing was just sitting at, a 52-week high. Now it's given back 3 months worth of gains. You think you can get down dirty at 80?
79.97 was your June 26 low. So just kind of trickling down there. Hey, Dennis, can I get mad at you because you had to talk about people covering their positions, their options positions? Look what you did to Twitter on me.
What's
all those? Yeah, now it's
rallying. You see, yeah, Joel's got those puts. He didn't cover those, but anyway, you have the stock already, so you got puts against your stock, so you were protecting yourself a little bit.
Right,
there.
Right.
But
anybody that was in the money, like if you took a flyer on the 40 puts. And this thing goes down. Actually,
35, didn't it?
It went to the low print. Oh my gosh, is that right? 34.30. It was it got to.
If you're out there, you get done. I mean, you get done. You bid 35. There was somebody in my Twitter feed said I'm bidding 35. I hope they got it because they're up $3.40. I hope they didn't cancel order. But I mean, it goes down 34.40. You were at 35. The odds are you probably got done. I mean, sometimes you see an exchange through a trade through on a specific exchange, but for the most part, with the earnings, they're sweeping out everything that's there. So I mean, So if you had the 40 puts, you bought the stock at 35. You right now are long from 35, and you're up, at $3.30 just on your stock. And obviously, you're still up $1.70 on the options, so you're up $5. If you're waiting and you have the 40 puts and you're like, please open soon, 9:30, well, I think you're doing it wrong. Get out there, have an equities account. You could have bought the stock at 35 or $36 and locked in those gains. Because now it's 38.35 and your puts are only worth $1.65. So if you're flat out just trying to sell the puts, you're not going to get nearly what you would get if you were trading the stock against it. Such a better way to trade, guys.
Okay. All right. Spoo's right back up there at the close. So they hit it a little bit on the ExxonMobil and Chevron, but right back at the close. So no quit here in the market. Scott's mentioning HMNY. Incredible. Reverse split to 25.
I had this actually just talk about, Scott, on my list here. Look at it. So it does a reverse split. What was it? 250 for one, Spencer? Yeah. 2 days ago?
Yeah.
And the adjusted price, I believe, if we go out to
21,
I think the adjusted price was like $25. It's 7. So you just lost another 70% in 2 days. It's like that's just more. It was more meat on the bone. You said it, Spencer. More meat on the bone, and they just come in here. I mean, it's hard to locate this one, so it's even hard to find a spot to be able to short it. But I mean, if you're buying these things, that stocks that are virtually zero, they just continue to give you pain. I mean, this is dry ships part 2, whatever you want to call it. But it's so hard to make money buying stocks that it went from $30 down to $0.10. I mean, you think, oh well, how low can it go? Well, it can go to 0. So just reverse split on you, and you just lost 70%. So right now, just hypothetically speaking, the person that bought this 2 days ago is almost as dumb as the person that bought it 2 months ago or because they lost 70% of their money in 2 days. Well, the guy that bought it, $30 when the thing, when we got to do the reverse split thing, so it would be now equivalent of what, I don't know, $10,000.
Exactly.
Is down 99.9%. Well, you're down 70%. So you're 2/3 just as bad. This is why you can't, buying stocks like this that are in the doghouse thinking, how low can it go? They could go to zero, and they can continue to try to go to zero. And you could lose 99% of your money just as much. I mean, if the stock goes to zero, the guy that bought it 10,000 or the guy that bought it $5 or $2 is just, in the same position. They lost all their money. So that's what you got to consider when you're buying these penny stocks. Is the worst that can happen is you lose all your money. So that's why I don't buy them. I don't like trading the penny stocks.
The all-time high, or just in October, that traded $9,714.38.
We got some requests here from the chat. Beer guy wants to look at MLM. Martin, it's been a long time since I traded this one. Ooh, wow, big move here recently though. I don't know what was that earnings yesterday.
Yes, it was. It had to be. Yesterday morning. Yes, it was.
Yowzers. So closes weak. That's an ugly, ugly candle. Now everybody who is in this is caught. Again, you think they can bounce. It did bounce. It went for 225 down to 210, then back up to 220, then gave it all back. I mean, the bounces are to be sold. You can see it already happened once. That would have been 10 o'clock yesterday morning, a 10-point bounce. When you see things get annihilated and then start to bounce, you're out. Use those bounces to get out, guys, when you're on the wrong side of the trade. I mean, even like on Colgate for me this morning, I got stuck. It was a small position. I was actually stuck with only 100 shares. It's a very small position for me. So I was like, what can I lose on 100 shares? Who cares? But, you can lose some money. I mean, it's down $2.44 here. So I'd be down $244. It came out with the report. Colgate came out with the report, and it was annihilated. It went down to 62.50. So I came in and I was like, I know, like $500 on that 100 shares. I'm like, that sucks. Anyways, it was wide market. So I threw a discretionary order. I threw myself way up at 68 and threw $2 worth of discretion on it, on the 100 shares. Somehow, I got filled. I'm like the high print of the morning on that 100 shares. I got out at like 66. I'm going to go see the execution. You can look at the tape, Joel. I filled at 66.79. Sold it. So that's just, I was like, I'm on the wrong side of this. The earnings are bad. I'll do everything I can to get out. So I threw it $2 out. Or I threw it, up higher, and because I don't want to make it look weaker. I don't offer it down because I don't want to push my own stock down. I'm trying to get out of it. So by you throwing out an offer, you're just making the stock look weaker on yourself. So I throw it up higher, put the discretion on it. So I'm outside the market. If somebody comes and bids it, it hits it. So somebody bid 66.79, boom, I'm out. Now it's 64.50. So I save myself $250.
And for the person that asked about Martin Marietta here,
because of the tangents.
Not much of a bounce. Keep an eye on that closing price at 206.85. Big volume day. Let's see if we can make a double bottom here. See if someone that protects the 203.04 low. Unfortunately, if that gives way, your next monthly low is way under 200. But let's see what they can do with that low. Man, and here it is. I'm looking at this as a building material stock, and man, if you look what happened to like Cat and Deere and some of these other stocks, what was this thing doing lurking up at the levels that it was at? I mean, right? They hit its building material company, and with the tariffs and everything that's going on, these other stocks have got annihilated, but had that consolidation and breakdown. Where resistance is, I have no idea after a down day like that. You did trade a little bit up in the pre-market, but on absolutely little volume.
Can I tell a quick Martin Marietta story real fast? Like a
Sure.
So,
love stories. What happened to Spencer?
No,
we love stories.
Nothing happened to me, but this is just some Wall Street history here. So I was reading the book that Scott Wapner wrote about the Icon Ackman Herbalife saga. And so Ackman, obviously short Herbalife for a while. There had been some rumors across Wall Street that Einhorn was going to jump on the short train with Ackman, and some whispers, and it was right before the Ira Stone conference. This is in like 2012, I think. And so Ackman is sitting in the front row of this conference, and everyone is really excited, and he's expecting David Einhorn, another big hedge fund guy, to come out and on his side and short Herbalife. And Einhorn gets on stage, and he puts up First slide of his presentation, MLM. Boom. He must be short Herbalife, right? Because MLM stands for multi-level marketing. Nope.
What does it stand for?
Multi-level marketing.
Multi-level marketing.
Which is the knock against Herbalife. So everyone's Ackman's like, yes, he's on my team. Nope. He's just long. He's just long.
Martin
Marietta.
That's funny.
So he just kind of threw it to Ackman.
That wasn't the details. Don't just trade on the headlines, guys.
Right.
That was the headline. the initial slide that said MLM was the headline.
Exactly.
You trade those headlines, sometimes you're wrong.
Yep. Anyway, so
real quick here for Trader asked, someone asked about Twilio, and it's bunching up here. 60. I mean, that stock came all the way back.
Look at that months.
It's
been a monster.
I think I had 32 calls in that one at one time. I don't know. Yeah, I don't want to look at it. But anyways, you look like you got a seller from just someone hawking 65 here. You made a high at 65.37, and you had another high at 65.01, and then this seller has stepped down to the 64.5 area. So it looks like it's ready to go, but I don't know. You'd have to take a look at the open, the book and some size in here. But someone really wants out here between 64.5 and 65. The stock was at, if you want another target, if it breaks out to that, October of 2016 high was 66.64.
Let's jump over to a couple other stocks in the chat there. Actually, first I'm going to go. Somebody's asking me about Snap, S-N-A-P. Great question here. I mean, Facebook gets annihilated, Twitter gets annihilated, is Snap going to get annihilated? Maybe. I am long Snap on a swing trade. I have been long this. I feel like it's like an investment now because I've been long this for like a month. So I set my parameters right off the hop. When I bought Snap, I think I bought it like 13.60, so I'm down a little bit in it. I said I'm going to give it $1. So I was going to give it down to 12.50, which is kind of like the lows of the move. You can see all those lows: 12.66, 12.67, 12.69. I said to myself, giving it to 12.50. It goes below 12.50, I'm going to stop out. And my target was $15. So I was trying to set myself up, like a 2-to-1 type risk reward there. Anyways, the trade's still on. None of those just keeps trading here between $13 and $14. So I've had some terrible news where Facebook got annihilated. I would have thought Snap would have stopped me out then. Twitter here this morning getting annihilated but bouncing back. I would have thought Snap would have stopped me out then. It hasn't stopped me out yet. So I guess I just keep going until it stops me out. So I agree. I probably won't hold in earnings. When does Snap report, Spencer, by the way? I should find that out because obviously a stop doesn't work when something opens gaps down you $5.
Good question. August 7th after the bell. So
I got some time. I got another like 10 days in this to see if this is going to, do anything here. But it's good that it hasn't got annihilated. I would have thought I would have got stopped out by now, but I haven't. So I've still got on for the swing trade. It's my only swing trade on right now. I have obviously invested tons of day trades in my swing trading portfolio, which my time horizon is like 2 days to usually 2 weeks. Although I've been in this, I feel like for 2 months. I set myself up. So I set it up and, I usually have my risk and I have my target and I go. And sometimes, I've been pretty hot in my swing stuff lately with the IQ and stuff. But I did get stopped out on something recently too. I can't remember what that was. But anyways, I'm along the Snap. I'm still in it. I'm going to stop up below 12.50. Or if it gets to earnings, I'll probably sell it before earnings because I don't want to hold it through the report.
TT Mac wants us to take a look at the Caterpillar. There we go. That looks kind of ripe here, Dennis. Knocking on the door, trading up 57 cents in the pre-market on not much volume here. But you're clearing an important level here, 142.50. A couple highs there in late June. You made a high yesterday at 143.55 here. So I don't know if you can get this thing unchanged here or lean on 142.50. This chart looks like it has some room. You can also, how I love my retracements. You could always, 50% retracement, 173. What was that That was about a 40-point move. So you add 20 to this. I could see this thing trading 150, 152. Looks like it's finally getting
on its way back. Nice support. You know where your out is. I mean, if it started going down below 135, the only problem is when you're buying breakouts in this market, it hasn't tended to work. What has worked in this market is buying the pullbacks and being more of a fade trade. You're coming here and buying it. You're chasing it a bit now. I mean, it was 136 2 days ago. So I can't really say I'm going to buy this breakout because breakouts aren't working right now. They're not working. Remember we had, who was it, Gil Morales? Didn't we have Gil on here a little while ago? Was it Gil that was saying it?
Yep, when I was gone.
Breakouts aren't working. And he's right. the fade trade is working more here right now. So it seems like you always get a second chance. So cat pulls back like 138, 140, maybe that's when you strike. If it keeps going, well, you missed it. But I'm not chasing stocks in this environment because I've just seen multiple times that it hasn't been working. I mean, some environments, breakouts work. Right now, it's not working as well.
Hey, Dennis, can you check AMD here? Obviously,
AMID.
Oh, AMID?
Yeah,
Okay.
he was asking about AMID. So we have AMD news, obviously. We already went over that. But Fuzzy's asking about AMID. And AMID is getting annihilated here in the pre-market. I am not following the story, but it's down 39% here. This is one of those more conservative stocks with a big dividend. I'm not sure if they cut the dividend or what happened here. I'm just trying to find out. Spencer, do you have the details here? Because
they obviously no idea. I have no clue.
I'm trying to see. There is a press release, so I'm going to PR Newswire.
That's where I'm looking too. Hold on.
Yeah, so there is a press release. American Midstream announces revised capital allocation strategy and second quarter common unit distribution. So I bet they cut that.
Is that an offering or I mean?
No, I'm trying to look here. Okay, so they declared a 10-cent per unit distribution. I'm not sure where that compared, but that doesn't sound good because it used to have a 23% dividend. It looks to me like they cut the distribution big time. But I'm reading this on the fly here. I'm looking at an article. It's 1,000 words, and I'm trying to grasp what it is. But if I'm just guessing, it looks to me like there's a distribution cut here. So, and that's maybe why they're annihilating it here this morning. I know, Lobster, you follow the news. Yeah, he's saying it's a divvy cut too.
Okay.
So that's what I just read from that article. The 1,000 points, trying to read it in 10 seconds here live. It looks like they cut the distribution big time. That's why it's down.
I mean, it's a big decline here. Without deciphering all the news, I could just tell you in April of 2016, this made a $6.18 low. Your pre-market low is $6. You're buck above that. I don't know if you're short or you had this. I don't know. That pre-market low could very well hold up. Below that, double bottom from February and March of 2016, a double bottom at 477, 475. But it looks like buyers lurking at $6 for now. And Dennis, I did want to mention AMD. They're talking about it. Is there an iceberg out there at like 1920 or something?
Because I want some size. You know what? I saw this last night, and there was some serious size kicking around up there. So there's just size everywhere. It is thick. AMD is thick stock right now. There's size everywhere. And I liked it when you talked about $20 before, too. If it gets up there, it's probably going to be thick all the way up to there. But anyway, it's a big move already. I mean, if you were long this, wouldn't you? Like, obviously, if you're shorting it, you're fighting the tape. But holy cow, if I was long this, I mean, think about this. This is just an incredible move here in the last few months. The stock was under 10. It's basically doubled. Let's just go out to the dailies. The stock has basically doubled since April. From 9 to 19, 9. It got in April, got down to 904. So we've over doubled here now in 1, 2, 3, 4 months. I mean, if I was long this, and I was for a while, I'd probably be rigging the register. Maybe you'd be taking it too early, but are they turning around? Maybe it's going to keep going. And obviously the stock's hot as hell right now. But maybe you bring up your stops, but hard not to take. It's a double in 3 months.
And I still got to find out if the Lisa Sue that is president of that company was the Lisa Sue that was my clerk on the floor in the early 1990s.
Really?
Remember I mentioned that.
You're connected, Joel. You know everyone. This guy's connected. If you go to him to the airport, it takes him like an hour and a half to get to his flight because he has to stop and talk to everyone along the way.
Yeah,
Joel knows everybody.
Try going with Lisa. Then every knows everybody. Okay,
Matt Beyond wants to know about PayPal. We got to keep going with the chat. Or what do you have, Joel? Where were you?
No, go. I want to make the chat happy here today.
Let's go, Matt Beyond PayPal. Yes, I bought PayPal for my investment portfolio yesterday. I am up in it slightly. I bought a little bit early because I said on the show yesterday I bought before the Facebook debacle, and PayPal obviously got more beats yesterday. But it came back, and that's good news. So I don't have a lot. You know my style of investing. It's almost all value investing, which is doing very well right now. But this is one I've been talking about for a long time, saying it's going to 100. I'm like, why don't I own it? And I think I still am a believer here. Yes, I'm paying up for the multiple a little bit, but it's hot. Is this one one of my long term that I'm never going to look at again? I don't think so. I think I'll probably be a little bit shorter term leash on this one. But I did stick it in there more for an investment. I do think it's eventually going to 100. I did buy it. Do I get it cheap? Do you get it cheaper? maybe, it did break a little bit down. It doesn't look as good, but it's good news that it came back yesterday. They did announce that buyback, and I think the stock's still going to 100 eventually.
All right. For me, a very important level is filling that gap because you had a gap down yesterday. And in order to fill that gap, you need to get to 91.01. Yesterday's high is 90.68. You backed off $1.50 on this one. Dennis, I don't like this one for you. I don't know. I don't think it's going straight to 100. I think you got people stuck up here above 92. Yeah, double down at 92.
I threw it in the long down. I don't know. Maybe I jumped the gun on this one. I've wanted it for so long. You know what? The long-term story here. I had this in my investment portfolio because I had eBay. I bought in the financial crisis, and I got PayPal spun off from it. And I had eBay and PayPal forever. And finally the PayPal just went up, and I sold it in the 40s. And ever since I've sold it, I've wanted it back. And I've obviously messed this one up too because I just paid up, and I only bought half of the original position that I had. So I basically put the money back in, but I only bought half the shares. I'm buying it way higher, but I don't know. I just got in my head it's going to 100. I don't know why. That's why I'm buying it.
Yeah, and you got in your head that Micron's going to 100.
I still think it's going to 100 eventually. And I'm gonna buy some more Micron eventually too. Anyway, you gotta have long term, you gotta have short term trading, but you gotta have long term, obviously, investments as well. And I've stuck Micron in my registered retirement savings plan, which is what they're called in Canada. And I think when I look, a few years from now, I think Micron, the valuation's attractive. I think that, they don't pay a dividend here right now, but I think eventually they could announce a dividend. They're making a lot of cash. They're doing huge buybacks. I don't think it's, I think it's just cheap here. I think the relative valuation is still cheap.
You know what, Dennis? You know what I noticed a little bit about your investment, your long-term investment style, is that like when you go into like a third of a position, you're not convicted. I mean, you're not
I'm not convicted.
And you bought some Facebook yesterday too, right?
Third.
Yeah, because that you're almost
convicted. It means I want to participate, but I'm not convicted. I bought a half PayPal position. I bought a third Micron position. I bought a third Facebook position yesterday because I want to participate if it comes back, but I don't want to be like killing myself if it continues to get cut. I'm not convicted. So when I come in something like the AMCX, remember I had that one? I took a double position on the AMCX. And I sold half of it at 66 because I just felt it got overdone. It's coming back in. If it gets back down to 55, I'm probably going to rebuy those shares. I still think AMC Networks, I was convicted in that one. And it was a good one. It went from 50, I bought it at $50. It went up to 69. It just got overdone with the whole Disney, Fox, all the fun stuff happening there. So I took some off the table. Wish I would have sold it all, but I sold half. But you're right. When I come in with a third or a half position, it means I'm not convicted. It means I kind of like it. I want to participate. I want to kick myself, if it keeps going up. So I'm just buying part of the position. But sometimes I come in all in. And usually those are my best ones when I'm really convicted.
Yeah, exactly. So, all right, SPOOs are rallying here. Cleared that double close at that 28.42 area, pre-market high 28.47. The big number on the upside's been the recent high, the move 28.49.50. And boy, Dennis, I'm glad I didn't take up you on that bet on the new all-time highs you did it. Yeah, we're getting up there. Real quick, I just want to talk just Bitcoin for one quick second. The Winklevoss's ETF got rejected. And also, and I'm going to put this article here in the YouTube chat. There was an article about the expiration of the CME July contract. Oh, it won't let me do it. Just Google Bitcoin spoiler, and that article should come up. Charter Communications, real quick. We'll close with that one. I see a trade down on a couple thousand shares at 277. I don't know if that was like a cross. I don't know. It did trade down there after hours. I have no idea what the news is, but you do have some major resistance at 289. You have 3 of your last 4 highs right at 289 in Charter Communications. Spencer, you want to wrap things up?
Sure.
Or Dennis, any final comments? We got 20 seconds left.
This is a tough day. So you got obviously Amazon trading up significantly. You got Twitter trading down significantly. You got some other earnings. You know, ExxonMobil oil looks like it's going to have a rough day. At least the oil stocks is Exxon, Chevron. Although Exxon looks like it's trying to find, you know, slowing down, but it's getting towards that $80. So, you know, watch out for Exxon. And always the trick is they take out 80, they go hit some stops, 79.90, 79.80, then come back up through 80. I might play it long that way. I might let it wash out through 80. I think it's going to try it. Maybe it washes out through 80, hit some stops, and then come back up through it. And if it comes back up through it, I might actually try it long for a day trade. So, you know, leaning on the low of the day. So the way that trade sets up is if you think ExxonMobil is going below 80, wait for it, you know, to wash out 79, 79.90, 79.80. If it comes back up through 80, and let's say the low of the move there at that point is 79.80. If it comes back up through 80, then I would lean on 79.80 as my stop, saying, okay, I think it stopped out. And this worked for me in Tesla very well the other time when we took out 300. It works on big whole numbers. And you get back up through 80, so you go long at, you know, 80 or 80.05, wherever you can get it, stopping out at the low of the day at that time, which would be 79.80. So I was just setting up the trade for you. I wouldn't just buy it, though. If it goes down 80, 79, I'm not just going to buy 79.80. You want to wait until it starts to go back up through 80 and then stop yourself out because it comes back down through it. You don't want that either. So you've got to always, you know, every single trade you put on, always have a contingency plan. If it doesn't work out, know where you're getting out.
The one thing I'll add, keep your TVs on, folks, because at 9:30, the president is going to be giving some remarks on the economy, 9:30 Eastern. So keep your TVs on. You never know what can come out of events like that. But that's going to be it for our show for today and for the week. Thanks to everyone in our chats. PreMarket.benzinga.com and YouTube.com/Benzinga TV if you want to catch our podcast or just catch any older show. You can go on iTunes, SoundCloud, Stitcher, TuneIn, or Google. Just search for PreMarket Prep or go to YouTube.com/Benzinga TV and rewatch our older shows there. Hope you guys have a good rest of your day and a good weekend, and hope you join us again on Monday. And last thing, good luck today.